Well, it's hard to say a blanket statement in terms of all the NOCs. There's so much, I think, difference in terms of their local policies, their willingness to go internationally outside their domestic borders. But broadly speaking, I think a lot of what we see right now with the host countries is there's a big push to grow domestic production. So these countries are suffering just like the companies from lower prices. They're bringing in less oil and gas revenue, and they're looking how can they grow their production, their domestic production in a meaningful way. The problem is, in order to do that for most of these countries, is they have to attract outside capital. And there's a strong competition for that capital. And I think the countries themselves and their NOCs underestimate just the overall commitment that we're seeing in the industry to lower budgets, the specialization, the focus. They're not expanding as aggressively as they were in the past decade. They're really rationalizing their portfolio and focusing on select areas. So I think companies are seeing the success that I talked about in Brazil and Mexico and wondering what's it going to take to compete against those acreage positions that are coming onto the market. So they look at these opportunities like South America, and they see it as an opportunity for themselves to possibly expand in the face of falling domestic production, but they also have to look at it in terms of competition, competition for capital from the majors, from other investors, versus what projects and assets they may be bringing to the market. So it's a bit of a mix, I think, right now in terms of the competition that we see. So I think for some of these national oil companies, in order to reposition themselves going forward, it's going to take a little bit of a different expertise, a little bit of a different capability set, and understanding kind of what they can bring to the marketplace in terms of what they have to offer in partnerships with the global integrateds in order to extract value out of their current assets. Some of it might be at the fiscal level in terms of royalty rates, fiscal regimes improving, but also one of the other areas that they can look at is shorter time cycles. As I said, companies don't want their capital tied up. So one area I think that we can see improvement upon is from the time of partnership to actual production, reducing that cycle, bringing these projects on quicker and faster. And a lot of that's going to be cutting through red tape and regulatory process, but that's one of the areas I think they can improve on in addition to the fiscal regime, royalty rates, things of that nature.